Investors and traders, welcome to the channel Market Chart Pattern. Today is 12th of February 2025. Hope everyone is having a great day. We will be taking a look at the key US markets in this video segment. As always, this video is for educational purposes only. It is not a financial advice. So we'll start by taking a look at the US dollar. So we had the CPI print come in today, which was a little bit stronger than expected, and we saw a fair amount of volatility in pretty much all the markets which are interest rate sensitive. So for example, the US equity markets, the dollar foreign exchange, and the interest rate markets, for example the bond market. So here, just looking at the US dollar, what we see is basically, you can see this is our pattern which completed right here. 13th of January, this is when the stock market also bottomed, the dollar topped. This is when I believe when the deep scare came out over the weekend. It kind of retested this level, went into this gap, and for the next 3 days it just sold off quite strong. And now what we're looking at is basically, it is essentially a trading range behavior. So the market has actually retraced about 50% of this decline and remains range bound. It is this 107 level which is really a key level to watch, and if we are able to get below these swing lows 106.50, then I believe we could see the dollar becoming weaker quickly. But right now dollar is actually fairly strong and remains range bound. We are seeing the kind of activity which is range bound behavior, but also looks some sort of distribution, and I just wanted to show you that on these weekly charts. Of course, the week is not over yet. We have got 2 more days to go, but you can see for a number of weeks here, this was our target. The market is just coiling in here, remains fairly range bound. This kind of activity we saw back in September of 2022, and eventually the market did break down in November with quite a lot of you can see this wide range bar right here, and then we saw the move lower right into this 99 level, which is a very key level to watch for. In the foreign currency pairs, the most important one to watch, this is the going back to the video over the weekend, is this Japanese yen. And if you'll recall, if you had watched that video, if you have not, then I encourage you to actually watch that, because we were watching for certain key price levels and patterns, and this video is just building on top of that. We mentioned this key pattern formation, and last Friday the market has closed right into this box. We have this nice ABCD 1-to-1 price projection, and what we have seen is a thrust higher, and especially today, and what the market has done is really strong, went above the 38.2% of this swing, and now it has retraced up to 78.6% retracement, remains above the 38.2% of this entire move now. So this just shows strength in this market. With a move like this, I'm expecting maybe for the next couple of days we might just go sideways to a little bit lower, and then I think as long as these lows are held of 7th of February, the market is actually looking to move higher, and there's a pretty good chance we get into this box right here. Now, one of the reasons that why we are seeing this kind of an explosive move in the dollar versus Japanese yen is because it's highly related to not only the carry trade, but also with the interest rate market. So just let me show what happened in the interest rate markets. This is the 10-year Treasury note. This is the futures chart, and if you recall, in the weekend video, we had mentioned that the market had retraced to a really key level, which is 38.2% retracement of these highs to lows right here. And also from a symmetry, the bearish symmetry is still in place. Everything was coming together, not just only in price but also in time. So if you look at this move right here, starting from 15th of November 2024 to around 6th of December 2024, it took about 14 trading days or 21 calendar days, and then this current move took about 15 trading days and 22 calendar days. So there is a lot of symmetry not only just in price but also in time. And when price meets time, the pattern is complete. And this is why I mentioned that we were looking for the yields to actually move higher, and this is what we have seen. And if we just see it on the TNX, which is the 10-year treasury yield, on the yield basis is the near treasury note, but on the yield basis is on y-axis we see yields. You can see we have this blue ABCD right at the 61.8% retracement. Initially we were watching for this 38.2% retracement. The market is so strong, it just went through it as if it didn't even exist. So really interesting is back above this trend line now, and the chances are it's got further to go, maybe even challenge these highs. So the rates are moving higher. This is the what we're looking at 10-year, and if we just take a look at this on the long bond futures, you can see the long bond futures is showing pretty much similar to the pattern that we saw on the 10-year treasury note. It went right into this box, 61.8% retracement, and now it's coming lower. I think it's got further to go, and if it breaks below this these lows of 14th of January, then I think it's gonna go for the lows which were put in back in October of 2023, and that will become a pretty good chance for it to do that. So what the market is saying, especially on the longer end, is that interest rates are moving higher. This will also impact mortgage rates, for example, because the 10-year duration, 10-year and above, these are typically the rates used for credit cards, mortgages, and quite a lot of other products. So they have quite a lot of impact. But if we were to just take a look at this on the shorter end of the curve as well, which is this is the U.S. government 2-year Treasury note, the yield today also moved higher. And it's got a chance, if it's able to get above this, get right into this 4.46%, which will be the 61.8% retracement, and we might see some sort of a pause for it to once it gets there. So rates are moving higher. This could typically have an impact on risky assets as well, such as stocks. Before getting to that, let's just take a look at the gold market, and here we go. So the gold market had actually done a pretty interesting pattern right here. So ever since it broke out of this dynamite triangle, which is in blue, over here we were watching for this, and our analysis was that either the correction is complete or is still going on. Once it actually moved above this the upper boundary of the dynamite triangle and rejected the lower this boundary right here, the move has been really strong. And now it's what is really interesting is it's moved right into the this level of about 2,962. This is a really important key level to watch, because it is the 1.618 expansion of this entire range. So starting from 31st of October 2024 to 14th of November 2024, and also it is an extended CD leg of this AB leg, 1.618 times the AB leg. And what we saw was the market actually reject these price and closed lower. But today's price action was really interesting, because at one point the market was fairly down, but then after the CPI report came out, initial knee-jerk reaction lower, the market rebounded. So I think we might actually go a little bit sideways right here, just because of these key levels. I'm really watching this. If the market is able to get above this, I think the gold has quite a long way to go. If not, I think it will remain sideways, with the chance of actually rotating lower as well. Perhaps it catches, after having such a fantastic move, it catches up with its 20-day moving average. We'll have to wait and see. I was also watching intraday this pattern. I don't know whether the market will do that or not, but I was watching for a possible ABCD pattern formation like this right here, where we could see this leg come in as low as 2,875. The market got down to about 2,886.50, so missed it by about $10, which is fair amount in the gold market. There's a possibility it could still do ABCD like this, so I'll have to adjust these levels, but I'll be watching this region really carefully. Getting below this, I think would open up for the lower prices, but this is what we are watching. We'll have to take one thing at a time. So gold looks quite interesting at these levels, and if we were to just take a look at the silver market, you can see the silver market is not as strong as the gold market. This is something which we discussed in the weekend video. It's just hovering right here at the 61.8% retracement, fair amount of resistance right here, getting above this. Maybe it means that we have got a shot at these 35 and maybe even higher to 36.68 as well. But right now, fair amount of resistance coming from this 61.8% Fibonacci retracement. Okay, now let's take a quick look at some of the global equities. So we'll start by taking a look at the German DAX. So the German DAX has actually reached our target of 22,183. This is 1.272 times of this AB leg. This is shown in this black cycle right here. I have not drawn an extension of this one, but I think I'll also get probably like 1.618 right here. So key level to watch, because right here we could see some sort of consolidation that takes place with the possibility of some sort of a pullback right here as well in the German DAX. And if we take a look at the UK market, it has actually gone and completed this 1.618 expansion as well, so also meeting our targets. Both these markets have met our targets as well. Now moving over to let's take a look at the Nikkei as well. So here we go. So Nikkei, it remains, look, this market is actually range bound. You can see this trading range has been going on for a very long time. We had some timing come in 13th of January, and what we saw was actually US stock market put in a bottom on 13th of January. It was very interesting to see that. Now right here, it's just been capped by 78.6% retracement. The chances are I'll just keep on chugging along like this. And if it's not able to get above the 78.6% retracement, I think it has a chance to actually move lower. So we'll have to watch this quite carefully. Let's take a look at the US markets. S&P 500. Here we go. This is the cash market. Let me actually blow it up like this so it's easier to see. Here we go. So you can see that today the market actually opened with a fair amount of gap. And what is happening is basically since you can say 24th of January, we are seeing some sort of news come out. It could be financial, could be deep seek, could be tariffs, and the market strongly reacts to that. We see gap down openings and then they get bought. We have had this happen on the 24th of January, then again 31st of January, and again 7th of February. And today was CPI data, but the market recovered quite a bit actually. So it does appear we are in this sort of a channel formation right here, getting above this, especially 78.6% retracement around 60,085 on a closing basis. I would really like to see two consecutive closes. I think that should give us pretty good confirmation we are in this CD leg higher, so we could actually have a stab at roughly around 6,300 on the S&P 500. What is really key for us is that the 3rd of Feb low is not taken out of the downside, because this is our point C of this ABCD like higher. So anywhere between 61.89 to 62.80, 6,300 could be on the cards. All really depends how this trading range is going to actually, when we break out of it, and hopefully break out of it to the upside. And the other reason why we are seeing this on the the kind of consolidation that has been going on, if you just look at it, it's pretty much been a trading range. Although the market did make a new all-time high, it's just been going on since 2nd of December 2024. It's because of these big ABCD cycles that completed right here, two of them. So technically this is the reason just market is going in a sideways consolidation for quite some time now. And if we just flip over and take a look at this on the futures, we see something similar, a picture on the weekly chart and on the daily chart. What we see is, let me show you like this. So here we go. You can see this is today's candle. The market was down quite a bit, like about 50 points at some point intraday on futures, and then it has recovered quite a bit today. So again, you can see just like the cash market really needs to get above this 78.6% retracement or 60.80. And then this blue resistance line right here for it to make a stab for this ABCD pattern that we all discussed in the cash market. Quick look on the NASDAQ 100, the cash market. You can see this market looks stronger than the S&P 500, but it's also being fairly range bound. Support coming in from the 61.8% retracement, resistance coming from the 78.6% retracement on the upside. It needs to resolve this one, and if we just take a look at this on the futures, this is the NASDAQ 100 futures. You can see that really nice recovery of the futures. By the end of the day, and actually closed positive for the days, which is really good. So good support coming in from 21,500 level. Now this is the 78.6% retracement I'm talking about. If it's able to get above this, I think we have a shot at higher levels. Yeah, which I will not put right now. I think I'll do that on the cash market because we have this rollover, and it was a pretty big gap up. But again, watching this 22,050 level, getting above this on daily closing basis, I would really like to see two closing daily closes above this. I think the market has a shot to move higher. You can also see that it's just pulling in a nice sort of a cup formation. Let me see if I can find the right tool to be able to draw this. There is a tool available. Okay. Yes, this is the tool I was talking about. So you take this and like this. So you can see that there is this sort of formation. Well, essentially, it's a pretty big trading range. Dow Jones, just a quick look on the futures, again stuck in a pretty big trading range. What I do not like about this is that it has formed a high, which is actually lower than this high, so it's got a descending kind of pattern like this. It needs to resolve that, and you can see it's one of those dynamic triangle patterns. It needs to resolve on either side, hopefully on the upside if it wants to move higher, resolving on the downside and breaking below this 38.2% retracement. We've got a fair chance for it to move lower. Then let's take a quick look at the Russell 2000 futures. Range bound market, really not going anywhere. So the rates are impacting these smaller markets, but if it's able to get above this whole resistance, then it's got a chance for further highs right there. So just a quick update on the market's price action today. Just before leaving, let me show you Tesla, what it did. I did a video about this yesterday, so we have been watching for this point D, and there was just no follow through in terms of the negative price. So it seems to have formed an inside bar. At one time it was pretty strong, but it gave quite a lot of it away. So it needs to, I think if it's able to get above these highs right here, getting about 350 even higher will be pretty good for it. So thank you very much for watching the video. Good luck, good trading, and if you happen to like our technical analysis, then please do subscribe to the channel, and if you do, hit that bell icon button. Thank you very much. Good luck, good trading, and speak to you guys soon.